what will the next ECB monetary policy decision in March 2017 be? We predict that the ECB will keep the key interest rates as they were set on the 13th of March 2016. This means that the deposit facility interest rate will stay negative at minus 0.40%, the main refinancing operations rate at 0.00%, and marginal lending facility rate at 0.25%. In terms of non-standard monetary policy, we expect that the ECB will continue to make purchases at current pace of 80 billion euros until the end of March 2017. And then, from April 2017, it will continue from a new monthly pace of 60 billion euros until the end of 2017 and beyond if necessary. But what does all that even mean? First, let's look at the Euro system and the European Central Bank's role in it. The European Central Bank, based in Frankfurt, and the central banks of countries that use the euro altogether form what we call the Euro system. The main objective of the Euro system is to take care of the euro, the money you use in your everyday life. In order to take care, they try to maintain the price stability, or in other words, keep the inflation rates below but close to 2% over the medium term. This is important, since it contributes to the right amount of economic growth and consequently keeps the job creation going. The important decisions are made by the Governing Council of the European Central Bank, which consists of all the governors of the member national central banks and the Central Bank Executive Board. Together they work hard to achieve the main goal of stable inflation. In order to do that, they have a range of monetary tools they use. The most important are decisions they take on key interest rates. As a response to the crisis beginning in 2008, they have also introduced a set of new non-standard policies to help them achieve their objectives. With tools of monetary policy, they influence the economy and price levels. Which policies do they use now? There are three different types of key interest rates they decide upon. These are the main refinancing operations interest rates, also called the MRO's interest rates. Second, the overnight deposit interest rates or deposit facility rates, and the overnight lending interest rates, also called marginal lending facility rates. Since the inflation has been below 2% in the period after the 2008 crisis, the ECB is currently incentivizing lending and consumption in the Eurozone. With low interest rates, they enable the banks to get money at very low prices through the main refinancing operations and overnight lending. As the banks have more money available, they can either offer it at low cost to consumers or store their money at the ECB. Since the interest rates are low, the storage is expensive. Not only that they do not get any interest, their interest is negative, which means that they essentially have to pay for it. In order to avoid the cost, they are incentivized to offer the money to the consumer. This means that you can get the loan for your new car at lower cost. This is important since many consumers like yourself are able to buy more, which increases the demand and raises the prices. In addition to interest rates setting, the ECB also uses the non-standard monetary policy. The non-standard monetary policy includes a range of measures that seek to ensure that there is a broad enough supply of liquidity to the banks and money to the market. One of the most important tools within that set is the Asset Purchase Program, or the APP. Under this program, the Euro system buys securities from private and public sector. By this they ensure that, for example, companies have enough money to produce and to maybe even invest in new production lines. This is important since it increases the money on the market, incentivizes investment and consumption. As this happens, people are more confident in growth and continue to buy more. This causes inflation, which will then reach the desired level of below but close to 2%. In order to be able to claim that the measurements are working and should be kept the same, further on we carried out the two-pillar analysis that the ECB is using. The two-pillar consists of monetary and economic analysis, with which we were able to thoroughly analyze economic developments. While conducting it, we kept in mind that the main goal is price inflation below but close to 2%.
So firstly, we should turn to economic analysis. The economic analysis is used to assess the factors which contribute to short to medium-term price developments. It focuses on indicators such as GDP, net exports, unemployment rate, and inflation. GDP. GDP or gross domestic product is the measure of output of a certain economy over a set period of time. We can see that Eurozone's real GDP has expanded by 0.5% in January 2017 compared to the fourth quarter in 2016. Moreover, the speed of growth has also accelerated, since the rise in the third quarter of 2016 was 0.3% as opposed to this quarter's 0.5%. The rise in GDP was driven by skyrocketing industrial production, which increased by 3.2% in the month of December 2016. This is mainly a consequence of the ECB's non-standard monetary policy tools. In particular, the so-called APP program, asset purchasing programs, have created very supporting financing conditions by supplying money directly to the producers and offering to buy their securities. This, together with the increased debt financing, has resulted in historically low indebtedness to asset ratio. Consequently, with their expenses reduced, firms have been able to invest and grow even more. This observation is supported by the Industrial Confidence Index and the index that shows the confidence of purchase managers, also called the PMI. Both indicate a 5-year high values, therefore we expect that production will continue to rise in the future. At the same time as GDP rose, the net exports have soared too. Net exports represent all that a country exports minus all of that it imports. Due to the depreciation of the euro against the dollar from $1.12 per euro in the start of October 2016 to $1.08 per euro in the start of December 2016, the exports have risen for 25.9 billion euros from November to December 2016. Exports have increased since the lower value of the euro means that European products are cheaper for foreigners with strong incuracies, as in the case with US citizens. Exports to the US represent 13% of Eurozone's exports. Although the future of EU exports might face some downside risks, like Brexit, the net exports growth should nevertheless be sustained because of the expected global recovery and diverging US monetary policy. Hence, the export industry in the Eurozone countries will expand and have a positive impact on economic growth and unemployment. Unemployment. The increase in production and exports created many jobs. This is how unemployment declined more than what it was initially expected, resulting in the lowest rate since May 2009. More precisely, the number of unemployed people has decreased for 1.3 million since the December 2015. As more people are employed, household consumption and disposable incomes rises. Furthermore, the amount from their income which people save, also called the saving ratio, is expected to decline due to the improving credit conditions. Since employment increased due to the increased total output and exports, it is reasonable to assume that it resulted in consumption-driven inflation. However, data shows that is not the case. Inflation. When looking at deflation, we were able to find out that inflation was driven mainly by the increasing prices of oil and not due to the increased demand of people. Inflation is measured by the Harmonized Consumer Price Index by measuring the price change of common goods. While the index considers all goods in the consumer basket, the core index accounts for price changes without energy, food, alcohol, and tobacco. While headline inflation reached 1.8% growth in January compared to December, the core inflation remained steady at 0.9%. This is mainly a result of increased commodity prices, especially oil prices, since OPEC agreed to cut its production. The unusually cold winter, which hit Europe, additionally contributed to the impact of the high prices. Such cost-push inflation is undesirable since it contributes to higher costs of production, which forces companies to produce less. This results into a lower overall output and increased unemployment. In order to stimulate the core inflation that is mostly driven by an increase in consumption, the ECB should continue with the accommodative monetary policy, meaning low interest rates in order to incentivize cheaper crediting. It is quite possible that the core inflation will not reach the close to but below 2% target no earlier than 2009, according to the ECB's own updated forecast. Moreover, there are some additional risks that might stay in the way of achieving the objective. Political anxiety ahead of 2017 voting season in some of the bigger European countries and unknown impacts of policies by the new US administration may both leave a great impact on the Eurozone.
The second type of analysis we did was monetary analysis. This focuses on a longer-term horizon than the economic analysis. Money supply is an important indicator since it shows how much money is in the circulation. It represents the amount of money available for people to spend. The more money there is, the more people can spend. There are several levels called monetary aggregates in which money is divided, in order to be more transparent and appropriate for monetary analysis. Money supply is divided into three aggregates. The M1 represents the most liquid kind of money, the money you can immediately use such as coins and notes, while the M3 includes all of the liquid money, plus not so easily accessible money like debt securities, for example. So let's look at the numbers. Seasonally adjusted M3 money supply growth this December was 5% compared year to year and 0.2% month to month compared to November. The annual M3 growth was again supported by the ECB's monetary stimulus launched in September 2014. The most liquid M1 narrow money supply rose from 8.5% in November 2016 to 8.8% in December, and contributed the most to the overall rise of the money supply. This indicates that extremely low interest rates and the quantitative easing package are working. In order to increase the money supply further to stimulate the economy's output, we propose the extension of the program. Finally, let's look at credit conditions. If credit conditions are favorable, people can spend more and the inflation rises. So the percentage of banks which reported tighter, or in other words more expensive credit for corporations in the last quarter of 2016 was 3.4%. This is chiefly due to the uncertainty around the extensions of asset purchase by ECB in the fourth quarter. Nevertheless, net demand for business loans increased sharply in the same period at a higher rate than in the previous quarter. The percentage of banks reporting stronger demand for business loans rose to 16% from 11% in the previous quarter, while demand for housing loans increased from 23 to 36%. The bank survey conducted by the ECB indicates also that banks expect that credit conditions will improve for both enterprise and housing loans in the current quarter. Rise of demand for household loans indicates that consumer confidence is being restored. Consequently, it is sensible to expect a rise in the core inflation in the future. On the other hand, the tighter credit conditions in the end of 2016 suggest that the banking sector still needs the accommodative monetary policy in order to offer cheaper loans and stimulate the economy.
To sum up, I'll cross-check economic analysis and monetary analysis. They both indicate that there is a further need to pay attention to price stability over the medium term. Economic analysis indicated that while the low interest rates and non-standard monetary measures are helping the producers who started to produce more, the domestic demand is still low. People still have troubles buying, and this is why the ECB should continue with their expansionary policy. Moreover, economic analysis also showed that some positive trends, such as lower unemployment rate and increased exports due to the depreciated euro. These trends were also confirmed in the monetary analysis, as the rate of household and corporate loans are increasing together with money supply. As the consumer and corporate confidence have already increased significantly, the ECB's monetary policy should stay in place to increase the bankers' confidence too. Hence, the European Union seems to be on a good track to reach its main objective, inflation below but close to 2%.